Hello everyone and welcome to my channel Learning Hub. My name is Subhadeep Dasgupta and in this video I'm going to tell you something regarding to insurance industry. Okay, we all do life insurances, general insurances and many more insurances to save ourselves from any kind of unwanted risks or unwanted disasters. Okay, likewise, insurance companies which are providing insurance to us, they are also doing insurance to save themselves. And this process is called as reinsurance. In this video, I'm going to tell more information regarding reinsurance. To know that, follow the full video and don't forget to subscribe my channel and press the bell icon right now. Okay? Reinsurance is the insurance of an insurance and it helps us to stop the loss of that insurance, okay, which is provided by the insurance company. And in this way insurer transfers the risk to the other parties and the risk is lower right now after doing this reinsurance, and this is done by a form of some proper agreements. Okay, who are the parties involved in this case? First one, the sending party who diversifies their portfolio. Next, the reinsurer who accepts the portion of potential obligation in exchange for a insurance premium. Okay. First and main one is the General Insurance Corporation of India, GIC Reinsurance. And there are many more companies which are operated like Lords India, Excel Insurance Company, SE India, Hanover Rug SE India, and many more. Okay, don't forget General Insurance Corporation of India, GIC Reinsurance, is the only company which can provide reinsurance to us. So what about these companies? These companies comes into the picture when GIC refuses some reinsurance product. Then only these companies can do their or provide us reinsurance. But the first priority always goes to General Insurance Corporation of India. In right side you can see the rankings of that companies, so you can check this, you can pause the video and go through it. The first factor is the climate change. We can easily say global warming, different storms are happening in different places of India, and likewise many more natural calamities like earthquake, tsunami, and many more. These are the main factors which are driving the reinsurance. Okay, there is a huge risk of a loss. Demographic change is another factor. Digitization. We are living in the era of digitization. Machine learning, AI are very important nowadays. These are also driving reinsurance. These are also a very big factor in case of reinsurance. Economic change, like in the last year 2019 our GDP goes down to around 4.5%, and according to current situation the COVID-19 pandemic is happening, so it is expected that it will go more downwards. Okay, current repo rate is also decreasing, so there are many more economic factors which are affecting this reinsurance trends. It helps us to limit the liability of a specific risk, to stabilize our loss, and to protect ourselves from any catastrophes. And it also helps us to increase our capacity. Some more are like risk transfer, arbitrage, capital management, and it also helps us to improve the solvency margin. Does it work? Basically, there are three parties involved. First is the individual, second, insurance company, third is the reinsurance company. The individuals like us who purchase insurance products from a insurance company and we give premium to them. Likewise, the insurance companies transfer their risk by giving premium to the reinsurance company. So this process is known as cession. The process of transferring the risk from insurance company to the reinsurance company is known as cession. So this is how it works. What are the types of reinsurances? There are different types of reinsurances. I have divided in three categories. First is the reinsurance by treaty, where insurance company and reinsurance company sign certain parameters which are taken care by the reinsurance company. Second is the facultative. Third is the reinsurance by premiums. Reinsurance by premiums can also be divided into two parameters like direct premium. Sorry. Second is the revised risk premium. So in case of direct premium, reinsurance company tell that this much amount you have to pay for this risk. Okay. So this is the direct premium. Second is the revised risk premium. Suppose the risk percent of a company is around 40%. But in this case, a reinsurance company again underwrite their risk percentage and check whether it is increasing or decreasing. According to that, the risk premium is charged. Market of reinsurance. It is growing at a spectacular CAGR close to 20% in the last 5 years in tandem with direct insurance. Okay. Blue means the RI placed outside of India. GIC domestic RI is in light blue and total domestic reinsurance market is in red. You can see the figures. You can pause the video again. Current trends in India, like in December 2018, IRDAI started new regulations to consolidate the provision governing India's reinsurances. It came into picture in January 2019. As a rule, I've already told you that GIC reinsurance is given the preferential treatment in the taking reinsurance risk. In new budget, net owned fund requirement is reduced from 5,000 crores to 1,000 crores to facilitate onshoring international insurance transactions in the IFSC and GIFT. IRDAI also examining the proposal allowing reinsurances to open satellite offices in IFSC. Okay. And one more thing, the digital era, like machine learning and AI, is also playing a major role in this industry. That's all for today's video. Thank you very much. Stay home, stay safe, and help the fighters.